What is up, YouTube? How you doing? Darwin here, back doing another video. In case you missed the last couple, I'm a real estate investor here in Arizona. I also work in a corporate real estate investment firm where I am a trainer. So I help people learn how to acquire and purchase and sell off-market properties. So making these videos because there's just so much crap out there. A lot of it's total bullshit. So this one today is about seller carry. One of the reasons I wanted to make this one is that I got a phone call yesterday afternoon from a friend of mine. He said, hey, I really need to, I need your help. I'm headed to a very important meeting.
Now we actually have to record it. Got it? I'm Darwin.
Got it. All right. This is Ryan.
So we're here at the bar having a couple of these. Ryan called me today. He is a buddy of my brother's. Found a sweet deal. Owner Carrie. Say hey to everybody, Ryan. Hey, what's up? Managed to snag a sweet deal here. So we are having a couple of beverages, working out all the details of this deal. I'll do a video on it later to show you guys, but want to just let everybody know what's up and how we get shit done.
And the result of that meeting was this video, okay? So today I want to talk about seller carry notes, right? A lot of people will call these owner will carry, seller carry backs, private lending, that sort of thing. Basically what it amounts to is the owner of a property, if let's say they're in a fortunate position to where they don't have a mortgage anymore, they're gonna act as your bank, okay? So this is basically person-to-person lending, and it is awesome to do with real estate, okay? It is just, makes things so smooth, a lot easier, but there are some tips and tricks to it that can trip you up, okay? The last property that I purchased was a commercial deal. I actually managed to do that one on a seller carry. We needed to do that because it would not qualify for a bank loan without a lot of work. Once we got it stabilized, no problem, take it to the bank, get it funded, boom, done. However, in the beginning, we had to do a seller carry, and it was an awesome way to get a crazy good deal, but they do take a little bit of practice. There's some rules and regulations and things you need to do. So, anyway, without boring you with a whole bunch of BS, let's get into it. One, why would you do this, okay? Well, there's a lot of reasons. Number one is just to avoid the hassle and the expense of having a bank loan, okay? Banks make money, that's how it is. You do not build a bank by losing money, all right? So in order to make money, they charge fees and interest, and they keep that, right? That's how they keep their lights on and pay their people and do whatever else it is that bankers do. So what we're trying to do with a seller carry is go direct to seller for a purchase as well as a loan. So they're going to allow you, you're going to have to pay some interest, obviously. You're probably not going to get one for free. They're going to allow you to make payments on the house until you can actually get clean title and they'll release the lien. So why you're going to do this mostly is really just for bank avoidance. That can be for a number of reasons. Maybe you got some shaky credit. It's okay. I was there once as well. It's fixable. Maybe the property won't work. Another big one of these is with commercial and multifamily property especially, there's pretty strict underwriting guidelines as to what the property needs to do money-wise for it to qualify for a loan. It's much more about the property, not as much about you. Sometimes they won't work. They're not rented, they need a bunch of repairs, they're old, they're crappy, there's a safety hazard, whatever else, but it won't work, okay? What we've already talked about, what this is a seller of a property acting as the bank for you, the purchaser, in order to get this deal done, right? This might be someone who's owned the property for a long time. Maybe they paid cash for it in the last downturn because they were able to get it really cheap. The other part of this, it's pretty cool. If you're dealing with folks that have paid off property, this can be used as a way to spread out the capital gains tax, okay? Capital gains tax, great clip on Parks and Rec. I'll put a link to it in the description. Ron Swanson explains capital gains tax by eating a fourth grader's lunch. It's amazing. But it can help you avoid that. So rather than them getting a big chunk of money from the sale of a property and then having to cut a big chunk of that to the government, no one likes doing that, they can take that over a period of months or years. So it spreads that out. And the seller is also making additional money in the interest payments that you have to make to them, okay? So it's a win-win for everybody. But uses, we've covered a lot of these. I mean, you name it. You can use these on properties, oh, good God. Someone owns it, someone inherited it, it's in a flood zone, it is full of cats, there were 19 zombies that they found in the basement. There's a million different uses for these, but basically it's going to be a non-traditional way to finance and fund one of your deals. Hopefully it's your next one, because like I said, these things are pretty awesome. So let's talk a little bit about how they work, okay? One of the reasons I got called to that meeting last night is that the gentleman in question, he's a wonderful dude, a friend of my brother's actually, but he works in commercial mortgage lending and had never done one of these deals, which blew my mind personally, but once I explained it to him, it's pretty simple. It involves a couple things. Here in Arizona, if you're in a different state, you're gonna have to talk to an attorney because this varies a lot. In Arizona, we use something that's called a deed of trust, okay? A deed of trust functions like a lien on the property of a home. So what's gonna happen is you're gonna have a title company or an attorney, whatever you prefer, it's really up to you. Title companies are typically a little bit cheaper. They're going to draw up a deed of trust, meaning a debt instrument to place against the title to the property when you close. If you do this right, you can also get them to do what's called loan servicing, okay? So a loan payment functions like this, P-I-T-I, all right? P, principal, interest, taxes, gotta pay them, and insurance, okay? So when you pay this payment to a lender, right, they're gonna take the taxes and the insurance, and they're gonna put them in a separate account right here. Boom. They're gonna sit in that account until it's time to pay your taxes. That's typically done on an annual basis. Sometimes you pay them twice a year depending on your state, okay? But the cool part is you can pay somebody to handle all this. There's a nominal fee. I think in Arizona for most companies, they charge about $15 or $20 a month, but they'll handle all the money. You cut them one check as the buyer, they're gonna shuffle all the tax and insurance money and make it all happen. You're covered by their liability insurance, and then they're gonna pay the seller their money for the principal and the interest. It's an amazing system. So most of the time, it's well worth it to pay someone else to get this done, okay? So when you're trying to figure out terms and notes, and this is the other topic that we need to segue into right now, let me get rid of this. When you're trying to figure out terms of interest rates and notes, I like to use a site that's called mortgagecalc.com. Sorry you have me stare at the back of my head. My hair is falling out. Please don't make any more fun of me than you have to. I can't help it. But mortgagecalc.com is a free website, and it will give you the ability to calculate mortgage interest rates, payments, and then also do something called an amortization schedule, right? And you can Google that if you want. It's semi-complex math, but it's not all that bad. But you need to understand it if you are going to do seller carry. So it'll be a given number of years that you have to repay the loan. It's going to be a given interest rate that the money is going to earn. And then the amortization schedule is a month-by-month breakdown of your payment, how much principal and how much interest is used for each category, right? So in the beginning of a mortgage, you pay almost all interest and very little principal. Towards the end of the mortgage, you're going to be paying almost all principal, okay? So let's do a quick little overview of how one of these deals would work. In fact, we used the one last night as an example. So the gentleman in question, let's call him Ryan. He's buying a house here in Scottsdale, right? Yay, house in Scottsdale, everything's amazing. So what he was able to negotiate with the seller, who is a personal friend of his, the owner of the house is a person who does not live in the United States. So the way the tax code works is that this person was staring down the barrel of a very large tax bill because the tax code treats foreigners a little bit different than it treats citizens of the United States. It's just the way it is. I didn't make the law. I'm not a politician or anything like that. So he's going to buy this house. He's going to put $10,000 down, right? So $10,000 is a down payment. Purchase price of the home is, I believe, $285,000. I think that's right. It's close enough for the period of this. So then what he'll have is he'll have a loan of $275,000. Sorry, I can't write. That's Dad influencing my handwriting again. $275K, right? And he managed to negotiate that to a really smoking interest rate. In the interest of just amazingness, he got it at 3%. 3%. That is cheaper than any bank loan you can get right now. It's May 2018. Interest rates are starting to creep up. 3% is unheard of money. Why did this work, right? Which was the first question I asked. I'm like, dude, how the hell did you get that deal done, okay? It is for a couple of reasons. One is that the home is paid off. The gentleman in question is fairly wealthy, so was able to just pay cash for the home. The second is that when you combine the tax benefits plus a nominal interest rate, the net in his pocket benefit to the owner of the house was immense, okay? It allowed him to realize his capital gains over a period of time. It allowed him to get a monthly income stream, get out of a property that he was going to lose money on in the environment that we have because of the taxes, okay? So Ryan successfully negotiated this deal because he was able to save this guy a lot of money on his taxes. And I mean, everybody loves that, right? So, it's good stuff today. So back to this. Ryan was able to do this. You're gonna punch this into the magic mortgage calculator here, and you're gonna get a payment, P-I-T-I, okay? So once you've got all these numbers dialed in, you take this whole package, boom, it's gonna go to a title company. So a title company at this point is going to function like a combination of a bank and a law office. They're going to construct the deed of trust, which is a paper debt instrument. It's paper that they will file with the county recorder that says you owe this money on this property. If you don't pay it, the seller's taking it back. This is a risk, okay? And then they will also act as a loan servicer. So every month, once Ryan moves into this house, he's going to pay this payment, P-I-T-I. I think on this deal it's about $1,000 a month. So he's going to pay $1,000 a month into the title company. They're going to disburse a portion of this to the homeowner's insurance company, a portion of it to Maricopa County here in Arizona. They got to get the tax money. The interest and the principal will go to the seller of the home. Okay? So this is an amazing deal. These are fantastic ways to acquire properties. I've done a couple of them. They're awesome. Most of the time, you don't find sellers who want to carry it for the full amount. Okay? So the other cool part about these is that 2, 3, 4 years down the road, the sellers are tired of taking monthly payments and they want their chunk of money. It is possible to buy these out for less than face value. And that's another video, a little bit more of an esoteric financial way to get into these types of properties, but most of the time, most sellers want to be cashed out of these loans within 2 to 3 years, okay? That's pretty typical. You might find some 5, maybe 10, something like that, but 2 to 3 years is amazing. But what that allows you to do is pay down some principal on the property, and then the next time around, you're applying to the bank for a refinance rather than a purchase, which is way easier to get done. Ask any loan officer you can find. Refis, way easier. So anyway, this is more or less how a seller carry works, okay? You're gonna find a property, you negotiate a price, get on mortgagecalc.com. I'll put a link to that in the description. If you got any other questions, throw them in the comments, happy to help. But mortgagecalc.com, figure out your principal and your interest payments. Then it's just a matter of having a lawyer or a title company draw up the appropriate documents. You close it just like a normal deal. So you're gonna go in, you're gonna sign paperwork, you're gonna pay your down payment and your closing costs, and you don't need a realtor to do these. That's what's really cool, you know? The information's out there. There's tons of deeds of trust out there on the internet. Obviously have your lawyer or whatever review them, and don't sue me because that's an asshole move. But these are a really great way to get that done. You avoid the bank and you avoid the headaches associated with it. So anyway, just wanted to review that. By the way, Brian, if you're ever watching this, congratulations, man. That was a hell of a deal you smoked. I'm kind of jealous. But this is it. Like I said, questions, comments, throw them up there. I'll do my best to answer them. Go get some work done. I appreciate it. We'll see you on the next one. And stay tuned for some other different episodes. I'm going to be bringing on some other investors so they can tell some stories. Anyway, have a good one. Be good.